fuck out of bed, bitch. Go. Get up, and they got go. Time to wake up, bitch. Get up. Get up. Get up.
Oh, shit. Hey, good morning. Can't hit the button right. I figured I'd get the theme going, so I'm wearing red today, guys, just to kind of enjoy all the pain and suffering we've had over the last, 30 to 60 days. So we're trying to keep it real. Hopefully everybody is having a good day. Jesse, reboot complete. Alan Y. Reboot of what? The market? Hopefully the red shirt wasn't a bad idea. I guess we'll find out. There's a lot to cover again today. Actually, maybe not as much as usual, but there is a decent amount going on that could be impactful. All right, let's start off here. Red market in Taiwan. Yeah, Taiwan actually, and a few other countries, Thailand especially, their market's really been dropping hard. But let's get started here. So Vladimir Putin and Donald Trump, they're going to be, the reboot from yesterday. Yeah. I did have to reboot my monitor in the middle of the screen here, the 48-inch OLED. That went dark on me, and the only way I could fix it was to reboot, which kind of sucked. I didn't want to be looking off at side monitors, and it just fucked up my whole setup, so I'm sorry about that. I really have to watch. It's weird, but with my setup, I've got all these lights, and I've got my Mac, and I've got all these monitors, and then I've got my headset thing, and then I've got my Stream Decks and all this shit. And I've got a rug underneath of me. And if I move too much, like if I drag my feet and then like touch my lights or hit something, it'll create a little spark, and then my monitor fucking goes out. It drives me nuts. It seems I don't know what it's tied into. I've got this adapter for my Mac to be able to display this many monitors. I don't know. It's so much work. But anyway, let's get to it. So hopefully that doesn't happen today. I'm not going to move too much. But let's see what we have going on today. So we got Trump talking to Putin. Between 8 and 10 this morning. So that's going to start in about an hour. They've reserved a block of about 2 hours to talk. Hopefully good things come from that. The pessimistic view is that Putin doesn't want to settle, and he doesn't want peace. And for that reason, he's just using Trump. I think that's wrong. I think Russia desperately needs it. And I think some of the recent changes that Trump made, where they're cutting off revenues for oil and gas, are going to press them even more. Just like they were pressing Ukraine, just like they withheld intel and did these things to put the pressure on Ukraine to get them to agree to a deal. They're doing that same kind of stuff with Russia. And so I think today could actually be very positive in that regard, and that could be good for markets. Also, Fundstrat said that he thinks the Fed is going to be dovish in the FOMC on Wednesday. So not today, Wednesday. That should be interesting. I do have to agree with him. I think that at a bare minimum, I think there's 100% on Kazashi or whatever it's called, that like betting site, that we see an end to quantitative tightening, which I think is going to be positive. We also have inflation-related data for Canada today, and Canada is an absolute fucking shit show. So that should be fun to look at. Mark Carney's a very interesting cat. He's telling Canada that you guys are going to get ahead by embracing the carbon tax that they were getting rid of a couple of days ago, but they're not really getting rid of, and that they're still going to have. And they'll probably just ramp it up even more so that they can trade more with the European Union and grow closer to them. And somehow they're going to surpass the United States. Good fucking luck. Hopefully you guys are smart enough to vote for Pierre. Otherwise, you're screwed. Anyway, U.S., we're flattening the Houthis in Yemen yesterday. Massive bombardment. We're trying to reopen the Red Sea again so we don't have to travel around the southern tip of Africa every time we want to move goods. That should help with inflation, too. We also have Israel going balls deep against Gaza last night. There's supposedly killing over 200 terrorists, bombing the holy shit out of them. And then we have astronauts coming back today after 9 months of being trapped up in space because of good old Joe Biden. And again, I think tariffs are peaking in 2 weeks. So I think there's a lot happening in the U.S. too. So we got the inflation data for Canada, but in the U.S. we're going to see housing-related data. It's probably going to be crap. We do have imports and export prices. That's going to be probably one of the biggest things to focus on. We have industrial production coming in, capacity utilization, manufacturing data. So today's going to be pretty big, and we will get through all this data by 8:15. So it should be a pretty early morning and probably a shorter stream today, I think. Jesse, get a earthing mat under you. You know what? I probably need to do that to remove the static electricity. That's probably a really good idea, so I don't have like these weird little, because it drives me fucking nuts. I have these huge monitors, two 27s, and then a 48, or not a 27s, like 36s. I don't know. They're big on the side, and then a 48 in the center. And I lose like 2 screens when that happens, and then I have to remove all my windows back. Drives me nuts. I like that idea. I'll probably do that. But yeah, so we got a decent amount of economic data. I've got a lot of hopium for people, if they like hopium, if you like that. I actually think, not so much for Tesla. I actually still think that with Tesla, we could drop pretty hard. So we could drop another 20%. I don't know that we don't have to. Like all things in life, we don't have to drop another 20%. We're sitting right here right now at 231. Another 20% would get us roughly around 185. We don't have to do that, but that would be a complete back test of this previous descending line. If that happens, I'm just going to tell you guys, I'm probably at least going to have $150,000 to $200,000 in TSLL. Again, I've been using a lot of leverage. Might turn out to be a bad idea. We'll see. I'm usually pretty good at this though. But I'm doing this because I strongly believe in the future of Tesla, and I believe whatever's happening is very short-lived. I think that these attacks, I just listened to something from JP Morgan talking about the brand damage they created is just horrific, like one of the worst things we've seen in modern times. Fuck all that shit. That means nothing. People are focused on car sales now. Car sales are a portion of this business. Autonomy, robotics, energy, everything else is huge. And car sales, I think, are going to be better than expected, especially after the Model Y ramp. People can use the downtime and the transition of the Model Y to create whatever fucking narrative they want. They did the same thing the last time the Y was built. They did the same thing when the 3 was built. The company was dying. The company was dying over here. Look at this. Look at this fucking shit. So we've got the X delivery. What happened with the X delivery? The stock traded down. It was just really bad. We've got the 3 delivery. That was actually catastrophic. They were building fucking cars in tents. That gave us 2 years of incredible pain. Look at the Model Y delivery. The Model Y delivery, we went from $64 a share. This is pre-split, all the way down into the 26s. Roughly 60% drop. Okay, for the Model Y. The Model Y was the most successful car this fucking company ever had, and it proceeded to go up 3,000+% in the next couple of years. So I'm not saying 3,000's happening, but what I am saying is if we do get that 60% drop, which is roughly the 185 range, I will buy the shit out of that, and I will do it with TSLL. And why will I do it with TSLL? Leverage is dangerous. People are right about this. People ask all the time, like why do you get into leverage? I try not to too much. I have been a lot lately because I incredibly believe in what Bitcoin's getting ready to do this year. And I also have incredible faith in Donald Trump, and everybody in his party, including Elon Musk, and what they're doing. And I believe that if you focus on what is real and what truly matters, the signal, which is great companies and great changes for this country that are going to be impactful in a truly positive way, that you will be richly rewarded. And so I'm leaning into this stuff more than I normally would. And here's kind of why, right? So if you look at Tesla from the bottom in April of 2022, and you look at it to the top in what was it? December of 2024, right? So just to give you some idea of leverage, right? And I'm sorry, that was in April of 2024, to be clear. April of 2024 over to the top at the end of the year. This is a long time for a 2x levered product, right? So Tesla went up 250% from those extremes, correct? But what did TSLL do? And again, you don't want to hold these things forever. And if there's a bunch of sideways chop, it will be problematic. It will be problematic because of rebalancing, because of theta decay, just all the stuff, all the tracking errors, all the stuff can cause you pain, right? But so in that same period that Tesla went up 250%, this product because of that same magnification from the upside. And again, this was over a period of like 8 months, right? Was up 740. So if we do get butchered on Tesla, I probably will have at least $200,000. If we get down to, if we're down 61% on this product, I have very strong faith in what happens by the end of this next year, beginning of 2026. We're talking about mass cybercab production at in the beginning of 2026. Okay, so like I am not. Hopefully I said cybercab. I am not super worried about this stuff. And I believe that the latter part of this year is going to be really beautiful for this country and for this company. And so I'm focused on the signal, and I will lean into this heavily. Are you going to use your TLT to go balls deep into Tesla? That is something I would say. Yeah, probably some of it, right? Like I don't know if I'll go balls deep. I'm already sitting at roughly $137,000 in TSLL. If this drops another 20%, that means I shave off 40, and that would put me at like I don't know, like 80 or something, and then I would probably dump another 120 into it at least. So that would leave me maybe with like $300,000+ in TLT if I ended up doing that. And the TLT has been an okay hedge, honestly. It's kind of flat. When I look at the stuff I already cashed out at a profit, and then I mean it's kind of been like cash. It hasn't been the greatest hedge yet. I do think that it's going to get better, and I don't want to spend too much of it. But again, I strongly believe in Tesla. And so I will end up taking advantage of that, and I will end up purchasing. And that's kind of my plan on it. So I wanted to relay that so people know what I'm doing and what I'm thinking in regard to this product, and how much money I'm willing to put into it. And also, too, if I think if we're really seeing a strong bottom signal, I might put in more, just to be clear. Because again, I want to diversify a little bit. I got a lot of ARKG. It'd be nice to have a levered play on Tesla. And then also I've got a bunch of Bitcoin related investments. Jesse has got some of the best timing I've ever seen. Not lately, not the last 2 months, but yes, usually I think I do pretty good. All right, let's get in here though. Let's get into the economy. I want to talk about James E. Thorne, our favorite Canadian. He said that the growth scare is priced in. Markets are adapting to Trump's front-loaded policy changes. A dovish pause from the Fed is likely. FFR of 4.33, that's the federal funds rate. That's what we actually have it set to. Plus QT is insanity. And I agree. Why would you have quantitative tightening? Why would you have a federal funds rate of 4.33 when your 2-year is sitting at what right now? 4%. So your 2 years at 4%. And the Fed is running a 4.33 with quantitative tightening. Makes absolutely no sense. It's constrictive. And why would you be constrictive right now when you can see signs all around the world that we're slowing? But it says Fed rate cut is warranted as tariffs deepen the economic slowdown from their tight monetary stance and the unwinding of Biden's fiscal spending. March 14th was a low, and while the economy deteriorates and inflation nears target, the Fed has lost control of the housing market. Trump's supply-side policies will take, they lost control of it years ago, will take time to work. Remember, monetary policy has at least a 2-year lag. That's partially true. You can front-run that a lot. And if you have companies that are already starting to invest in America, they will put that money into construction, obviously, and starting to hire and everything else. So you'll see monetary policy lag, especially at the tail end, for a very long time, right? Like it'll continue its path for a while, but you can see the signs much earlier. He also said growth scare is priced in. Secular growth names bottom before the S&P did on March 14th. The 1990s analog in play. Ignore the noise. It feels like early 95. I do agree with this, but I don't know if this is a great representation of it because he talked about the NASDAQ over here popping. And again, Tesla kind of, still dropping. And I don't know if that's great signal right now with everything that's going on with Tesla. Let me see. Ariel said bought TSLL Leaps last March and April, and they 10x'd by December. I converted half to shares and held the other half. That's smart. That's smart. So you used leverage at an appropriate time. Again, leverage can be dangerous. I don't want to downplay it. It can be dangerous and very problematic. I do believe there's opportunity for really good upside, though, in the latter half of this year. I strongly believe that, even though you should still, I believe, be hedged too, just in case. But I think, again, with Bitcoin, I'm just going to make this argument real quick, and then we'll get back to it. Here's TLT. Again, it hasn't done much. Hasn't actually been that great of a hedge. Got a baby bounce on it. I do think we're going to get a breakout. I don't want to buy too much of this or too much of the Tesla stuff because I still think we can get, I think we can get a 22% move very easily to this trough over here. And that would, if you just cashed out there, again, with the options I hold, that's an easy 10x in my opinion. So with what I'm holding, I don't even know what I'm at right now. It's probably like 450,000 or a little somewhere around there. What I'm holding again could be like almost $1 million in gains, just from that, and then be sitting on $1.5 million in TLT. So I want to buy Tesla. That's probably the thing I'm looking to dial in the most right now, because I do have a lot of crypto related, and I've got ARKG. I've got like 400,000 in ARKG calls spread out between now and June of 2026. So I'm feeling good about these other plays and my Bitcoin plays, but I do want more Tesla. And so that's what I'm looking for. Hey, Bearish, I lost a crap ton of money on Tesla Leaps expiring a year early in 2022 and 2023. I did Uber Eats last night with my Tesla for extra capital to just continue buying shares at high conviction. Yeah, again, leverage can be painful, and especially if you get the timing wrong. I believe that the 2022 range especially was super painful. I'm assuming you lost most of that in 2022 because 2023 was a great year for Tesla. But 2022 was near the abyss, right? We were near $100 a share. And so that wasn't an easy time to be invested in Tesla. But yeah, I'm sure that's when you lost a lot of the money. Let's hop over here though. I wanted to show Bitcoin real quick because again, I think we've got gold, again, above $3,000 an ounce, just continuing to go up. I strongly believe right now, though, that this 4-year trend line, there's people talking about how Bitcoin is over for the cycle. I just think that's the stupidest shit I've ever heard. Could we test down again to test the support line? 100%. We can do that. We could grind here for another week or two. But I think it's dumb to say that this cycle is over. I just think that's fucking stupid. You can't tell me that going from 69,000 to 109,000 was the cycle for Bitcoin. And that really, it was just like what, a 40% gain. That was it. 50%, like, I'm sorry, maybe 60, 70% gain was it for the entire cycle. I just think that's retarded. We have everything fundamentally set up to give us, one of the best cycles in history. And all we're waiting for is for people to realize that America is okay and headed down the right path, and that the policies that we're implementing right now will help the entire world and everybody that embraces us. And I think that's coming a lot sooner than people realize. So again, I would just, I moved the wrong chart over. I would focus on the big picture. I don't think Tesla's dying. I don't think Bitcoin's dying. I don't think America's dying. If you focus on actual signal, I think you're going to be okay. And as history guy Scalp says, April 2nd tariff news direction telling along with tomorrow's Fed statement. And I think the thing that you need to realize is the White House has already told us that there's a bunch of countries they're working with to try and remove tariffs before April 2nd. So these countries don't want to be hit with reciprocal tariffs, so they're already looking to remove them or lower them in order to be able to reduce the impact to their country. So I think even before April 2nd, we're going to start getting more and more positive news. And imagine what happens today if we hear about a ceasefire with Russia and Ukraine. I don't know. I don't think people are focusing on enough of the good things that are going to be coming, let alone all the tax breaks and all the good stuff that's going to happen in the middle of this year. Actually, a little bit before, probably May. And something else I wanted to talk to you guys. I think I need to find this real quick. Give me 1 second here. I'm going to see if I can find this. So I wanted to talk to something that's a little weird. It's Chuck Schumer. Let me see if I can find this. This might be under the Trump section. I just want to see if I can. Yeah, it probably is. What happened with Chuck Schumer? Can you guys tell me? I think we got something on him. I'm going to see if I can find this video. But Chuck Schumer before, oh God, I don't know where it is. Chuck Schumer before his vote, where he flipped completely to the other side, was 100% against everything that was going on. And then all of a sudden, he just voted the other way. he's compromised, right? I think he is. I think he's compromised. I think there's something on him. And isn't that great? Like, won't that be helpful? I truly think that's the case. So I don't know. I'm just very fascinated with what's aligning right now around the world. We do have data coming out in about 11 minutes. I think, I don't know. Guys, he literally went from saying that, like, Republicans were doing nothing to work with the Democrats and that nobody should pass this, yada, 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 yada. And then he's like, then he just totally splits with the Democratic Party and votes for it. I think he's compromised. And if he's compromised, that means we've got him on a future votes too. How many other people talk about, like, the Epstein files haven't been released yet. And Democrats will say, well, oh, that's because Trump's on there. Whatever. What I find interesting is, and what I wonder, is how many Democratic senators are on there. Or other things that they found from the Department of Government Efficiency and all the research they've already done, where these people are compromised and they're guilty of crimes that could imprison them. I don't know. If I was Trump, I don't know that I'd release that stuff right away. I would probably use it to be able to get these guys to vote the right way. Personally, that's what I would do. I would try and get it to where, we can help America and we can, get these tax relief things in, and we can do everything that we need to do to implement his plans. That's what I would do. So I don't know. It's just fascinating. It'll be fascinating to see what happens over the next several months. But let's look here. So Kobayashi letter said the share of U.S. small businesses saying it's a good time to expand over the next 3 months declined by 5 percentage points in February. I've also got another chart here that's going to show how small businesses don't have problems getting loans anymore like they were, which I think it was like 8 to 10% were reporting that they were having issues getting loans, and now that number's down to 2%. I think that small businesses, after we get some clarification on the tariff stuff, and after we start talking more about all the positive shit that's going to happen with all these corporate tax breaks and all the no tax on Social Security tips over time, all these things that are going to be implemented, $5,000 checks from Doge potentially, especially if we got Chuck Schumer compromised. I think that these things will start to have a really positive narrative, and we will see this flip around like crazy. So you could bookmark that shit. Let's talk about it later. Caleb said Signal. Subu Trade said strong breath. We've seen 2 consecutive days where over 90% of the S&P stocks have advanced. That's good. We want to see strong breath. It's a wonderful sign. We also have Andres Steno Larson. Oh, wrong screen. Let me maximize over here and get this better. Who was talking about how comparing Truflation's metric of inflation way down here to this stupid University of Michigan survey, which shows that it's going to be skyrocketing to the moon. It's very interesting to see these narratives and then what the truth is. And I think the truth is going to come out more and more and more. Here's the representation that I was showing you guys of percentage of small businesses finding it hard to get credit. This is the NFIB reporting that credit was harder to get than last time. And if you look here, the number has dropped so significantly. So if you look over here, you can tell what happened in 2008, right? Credit became really hard to get. This looks nothing like 2008. Credit is not hard to get. The credit markets, none of this stuff is showing. Credit spreads are not showing that the market is falling apart, and lenders are lending. Isn't that fascinating? And Seeker of Truth said small businesses do well with lower rates. It's a good thing that we're going to be seeing lower rates then. It's a good thing. Also, the probability of a recession, this is per the Federal Reserve Board, Federal Reserve Bank of Cleveland, Haver Analytics, and Bravo Research. The Bravos Research, that last chart was his as well. So, because he brought this up, but it's from these other sources. It says U.S. Federal Reserve Recession Probability Model. Probability of a recession calculated by the yield curve. It's falling off a cliff, or at least it's forecasted to fall off a cliff now. So we've had this probability of recession being really high. And if you look over here, the timing of this, I mean, it's pretty right about 2008. It's pretty right. It was late on the dot-com bubble. Let's just be clear on that. And then the 80s. So I don't know how much signal this has, but they're forecasting that this is going to be dropping like a rock, and I think it's something to pay attention to. And again, what was interesting yesterday is the Magnificent Seven all were down and hit, but we had wide market breadth. I think that's telling us something. Also, the S&P was the third most oversold it's been since before the pandemic. If you look at the S&P price versus the 50 DMA standard deviations, so the standard deviation was astronomically low. It was basically to the depths of 2022, and then also again the pandemic. So this is a sign that, again, massive oversold conditions. And then I just wanted to remind people about the global liquidity cycle and about how we're still showing that we should have global liquidity expanding, and we can definitely see that coming out of China. Canada's also, just again, this is just comparing us to other countries, but Canada's recent population boom has not come with productivity gains. So again, I want to reflect this, because all these countries that are trying to offset declines in their population by bringing in a bunch of illegal immigration and unskilled labor, it is not helping. The real GDP per worker in Canada is dropping as the population increases and the money printer goes burr. This is not helpful at all for Canada's economy, and yet they still pursue this path. Elon said before, lower rates, Tesla margins go up a lot. I don't recall when he said that on the past year. Yeah, so he warned that Tesla was going to get hurt a lot when rates were going up because of car loans becoming more expensive. That same concept works in the opposite direction when rates go down. Rumor, DOD getting into Bitcoin mining. Interesting. Cool if true. Amit, hey, just joined. Can we look at the Tesla chart? I did, actually. I did a little bit ago. You might want to back up the truck, but I looked at the Tesla chart and I compared it to TSLL, and I talked about how 185 is probably the bottom, and that we could get to it, and that would be a 40% drop on TSLL. But TSLL still has the opportunity to go up a shit ton in the next year. And I compared how a 250% move in Tesla from April to December created a 750% roughly move on TSLL. Roughly 3x, even though it's a 2x fund, because that's what happens when you get a strong move to the upside over a period of 8 months, which shows that you can hold these things, but if you're getting sideways chop for really long periods of time, they will underperform and not do well. All right, I think U.S. economy, I think I'm going to jump out of that one real quick here. I'm going to jump over into Trump. Again, the call today, I think that this call could be beneficial. I don't know that it'll mean an immediate ceasefire, but it would be awesome if it did. So we'll see what happens. That call will be starting in about 30 minutes. Again, about 4 minutes until we get economic data. What are we going to be getting in 4 minutes? We're going to be getting, and you know what? Let me just refresh here. We're going to get the Canadian inflation data too. I'll probably actually start with that. Because building permits are kind of boring. Even though we do have export prices and import prices, I'll probably start with that first. That's going to be the most important. So we'll look at those, and then we'll jump over to Canadian data. And then at 8:15, again, we get industrial production, manufacturing production, and capacity utilization. And then that's going to be it for economic data today. So we'll come back to this just in a second, but I'm excited to see what it's going to be doing. Also, I wanted to talk about some other stuff. So there's a lot of interesting data in regard to voting that's going to be happening, especially with the deportation of all these illegal immigrants that they're trying to turn into legal voters. But in California, we're seeing since November, Republican registrations are up 138,147 versus Democratic registrations up 12,240. So you're seeing a massive shift towards the red in California, which I think is fascinating. We'll talk more about that in a second. This says, why are Democrats, including governors, mayors, and judges, so determined to keep these domestic terrorists in America? So again, these guys are trying to stop this from happening. A bunch of tattooed gang members that are of Tren de Aragua. It doesn't make any sense. It's not a winning discussion. It's really stupid that they're even participating in this. We also have, this is funny because, it's not funny. It's really fucking sad. But the New York State governor, and again, in New York as a state that has accused Trump of trying to pull people off of Medicare and Medicaid, is literally doing that. There are over 100,000 New Yorkers that are getting ready to lose their at-home care because of this just horrific fucking program that they're trying to cram people into, where they don't have capacity to actually be able to handle any of it. And this is a guy right here whose wife might be kicked off of that, and she could die. And so this just looks like a clusterfuck for the state of New York. Look at MSTR announcement. Yeah, I can do that. Let's jump over here. MSTR. What is their latest announcement? What are you guys trying to tell me? Who's ready for 1900 MSTR? Okay. What's the announcement? Can somebody tag me on it? What's the announcement? Can you summarize it? Oh, here. Strategy today announced the launch of Strife, a new perpetual preferred stock offering available to institutions. Wow, is there anything they're not fucking doing? That's insane. I'll have to check this out later. Oh, here he is down here too. We got Sailor. I'm going to bookmark this real quick. 1 second. Let me go down here too and see his comments. Strategy today announced Strife, a new perpetual contract available invest authors to select institutional investors. Wow, man. These guys just don't stop. They're just pulling in every bit of money that they possibly can. We'll issue 5 million more shares of MSTR to raise money for buying more Bitcoin. So that, we'll see. That could hit the stock price a little bit today. We'll see what happens with it. Let's see. Thoughts on Warren Buffett potentially selling off his real estate. I think it's a sign that he thinks that the real estate prices have topped. And he's probably right? I think once rates start to come down, we're going to see real estate prices dropping. And I think we could see laws and things coming up here in the future too that limit corporations' ability to buy up, single family homes en masse. I could totally see something like that. All right, let's keep going. We'll look at other stuff like that. We'll probably talk about that more, Strife, tomorrow. I did want to talk about this. Stephen Miller is doing a great job for the Republican Party and for Trump. He talks about in here rogue judges, and I think this is a massive problem for the United States. Why do you think house prices will come down as rates come down? I've talked about this a billion times, but 80% of normal home sales are existing home sales. So the existing home sale market has been locked up for over 2 years, basically since 2021, since rates started to rise at the most aggressive rate in history. So that killed the existing home market. It completely destroyed it. It brought it down to levels that we haven't seen in 35 years. And because of that, since the home market has been frozen because there's people that have rates that are 2 or 3% and they're not willing to move and lose those rates, that's frozen the housing market. And a frozen housing market is a problematic because then people that want to buy, they don't have the inventory online that they're looking to buy with, right? So if you don't have a bunch of houses to buy, you don't really have a lot to pick from. And because of supply demand dynamics, if you don't have a lot of houses to pick from, and we know that we're still undersupplied on new housing supply too since the great financial crisis, that you're going to have a problem where prices keep going up, right? But with rates going down, there's going to be more and more people that are willing to sell their homes because they're like, oh, hey, we'll talk about it more. Once the rates get like into the 6.5 range, you'll start to see the housing market open up. The housing market opening up is going to cause prices to drop because there'll be more inventory. And you're just going to see, and again, if Warren Buffett dumps his shit, he sees this coming, you're going to have that problem too. All right, let's look here. So 7:30, we got export prices 2.1% versus 4% forecast. So we're not exporting inflation to the world. Import prices, though, were slightly higher, 2% versus 1.7 and 1.6 for consensus and forecast. So we are getting slightly higher than expected import prices. But let's look here real quick and see what the overall trend is. So I wouldn't say it's damning for import prices. And let's look at export prices real quick here. Export prices are going higher, but let me see here. No. Is this not showing? Sometimes it doesn't always reflect the latest update in the screen. Let me just refresh again. So export prices, again, 2.1% versus a previous of 2.7 and 4% forecast. So this is starting to roll over a little bit, which is good. It looks like it was on a path higher. So, this is probably, if anything, these are probably just a little bit hot. Let's look at Canada's inflation-related data real quick, too, while we're here. Canada's inflation rate year over year was 2.6%, so they came in hot. 2.2 for forecast, 2.6 for their actual. Core inflation was 2.7. This actually doesn't surprise me for Canada. Again, they've got so many issues. They're going to be printing money like crazy. They've got massive problems with immigration and housing and all this other stuff. So I'm not too surprised to see that theirs is going up. But let's see here. CPI median year over year, 2.9% versus 2.8 expected. Trimmed mean, 2.9% versus 2.8. So they're running hotter than us. Building permits, at least with today's data. Building permits were 1.56, which are lower than expected and forecast. Or somewhere in between those two. That's not too much to be expected. And housing starts actually was shockingly high. 1.5 million versus a previous of 1.35 and a consensus of 1.38 and a forecast of 1.34. So let's just look here. So that's interesting. So that actually, let's see the 1 year here. Let's go to the 3. So these numbers are actually pretty good. It's starting to pick up a little bit. We'll see if that continues. I actually think that continues heading into the beginning of the year. Oh, sorry, I was behind. Yeah, no problem. Why do you think house prices? Oh, I already answered that, or kind of answered it. All right, let me look here. Is there anything else? Housing starts 11.2%. That's much higher. Let's see if that trend. Yeah, but we had a deep trough in January too. So I don't know how telling this is. It does look like the trend is up though. The trend is this way. So I don't know, a little bit hotter than expected. Let's see what Rick Santelli has to say about this. Let's one sec here. Let me kill some of these headlines to get the screen a little bit better. I want to go back and hear what Rick had to say. See if there's any revisions or anything else. All right, 1 second here.
385 seasonally adjusted annual.
1 second. There we go.
Welcome back to Squawk Box. Rick Santelli here live at CME HQ with the breaking news of the morning. We start out with housing starts for the month of February, looking for 1,385 seasonally adjusted annualized units. Comes in much stronger, 1,501,000. That's a good number. That would be the best number going all the way back to, let's see, the end of last year, actually, we were 1,515,000, but it still was a nice jump. That's, over an 11% jump? And if we look at permits, well, a little bit better. We're looking for 1.4 million-ish, and we end up with 1,456,000. That's actually down sequentially from last month, still unrevised 1,473,000. And if we consider right now that we have import prices, export price coming out for February in front of Fed meetings, these could be important. If we look at import prices month over month, comes in at 0.4, up 0.4. We're looking for an unchanged number. That would be the biggest month-over-month import price rate of change since April of last year. If we take out petroleum, it still remains at up 0.4, double expectations, and the loftiest month-over-month also since April of last year. Now, let's look at import prices ex-petroleum month-over-month. And that, we just did that. Let's look at year over year. Comes in at 2%. 2% is a little higher than expectations, and that would be the highest level month over month since December of last year, so just only a couple of months. Finally, let's switch gears to export prices. Month over month, up 0.1. We're looking for down 0.1. And export prices year over year, up 2.1%. This one's noteworthy because last month's up 2.7 was the highest since December of 22. So to be moving down a bit is a good thing. And when you consider what the dollar had been doing, although it has been slowing and moving a bit lower of late, 5-month low close yesterday, that may have affected export prices, especially when you consider all the issues on pre-tariffs and some of the activity that was going on in the trade markets. Becky, back to you.
All right, Rick, thank you very much. While Rick was speaking, we do have confirmation of that story we've been talking about earlier today. This was first broken by the Wall Street Journal yesterday, but Google is announcing that it's.
So today looks like, with this data, I think it's going to probably be a down day. Unfortunately, TLT is getting hit by this too because of the fact that I think import prices especially coming in hotter than expected. And again, Canadian inflation data coming in hotter than expected. I think we're on a different path from Canada, but I do think people will probably look at that and that they'll tie that in together. So that kind of sucks. It sucks, and I think it's short-lived. This is February data, and I don't think that I think that these things are going to roll over, but for the meantime, it's probably not going to help markets. And so Tesla's down 3.5%. Again, I think it can get to 185. I do think that the makeup we're hitting with like MicroStrategy and Bitcoin and these other things, I should probably talk about that real quick here too. I do think that we've had an amazing bounce on MicroStrategy. This W bottom, I think, is beautiful. I think the ability for this thing to break out is strong, but I don't know if we maybe test back down to this 280 range, or I'm sorry, 270 range, right around here where we start to see volume, 260, 270. before we end up going higher. I don't know. Any of that can happen. Even though I will say this, over the last 2 days, we did close above this trend line, which is the first time that that's happened since we started our downward trend. When was that? In November. So you've got 5 months or 4.5 months worth of downward trend, and you've got your first time of closing above it for 2 days in a row. So I do think that we'll end up probably getting a breakout in the not too distant future, but it could take a little bit. And then real quickly, I want to show I'm going to show Bitcoin again real quick, because I still think Bitcoin can roll over. Let me just pull this up. So, and let me see. I'll go to daily real quick here. So if we look at daily on it, we're actually testing up against the 200. We're doing it with ferocity. Like, we're hanging on to it really, really strongly. And I'm trying to find some other periods where we've done that. I don't know if there's any over here. We really haven't seen this level of strength. The 200 is this orange line right here. And again, you can see where it did it here, right? Where it tested really strongly up against it, and then we had a breakout. I'm trying to see if there's any others. There isn't really any local, but we've been testing this thing hard over the last several days. Now, it could bear flag and roll down, but I think the length that we've been sitting up here is showing price pressure against that. I mean, it's just literally hovering up against that line. So again, normally what you see when you're touching that much is that you want to break through it. It's showing you that it wants to spend time on it. But it could also roll over. I think you just have to be mentally prepared. Right now, the next 2 weeks, guys, I think anything can happen. I think anything can happen in these markets, and you just need to be ready for it. It's going to be very headline driven. I don't know. I don't think you can expect just a rocket ship to the moon, and I think you just got to be okay with that. Let's see here real quick. Intel, you got a new CEO, and it's up. That's awesome. I don't know if that helps Intel at all. I have very little faith in Intel, especially from the last CEO promising the stars and then delivering anything but that. So I don't have a lot of faith in Intel, honestly. But I'm glad to see anybody making money in this market. Jesse, if you would consider a small position in MSTY, it gives 80 to 120% dividend annually. Yeah, I don't care about that. That's not really anything I'm focused on right now. At the end of the bull market, that would probably be something I'd be focused on. Yeah, that would probably be something I'd be focused on. But I don't know about right now. But when I think we peaked, I'll probably be interested in putting more into something like that. What does it look like for downside, though? Again, 120% in a year sounds great. It sounds like, oh, hey, I'm getting income. But what does that actually... Let me pull this up real quick. What kind of downside protection does it offer you? I mean, you're probably getting the same downside, but you're getting the dividend, right? 46 for the high, and it went down to $17, $18. Oof. So yeah, you're definitely going to need that dividend. Yeah, I don't know. I don't know. I guess it should offer some upside potential. What did it do over here? September of 2024. It was at 19, and then it went up to 46. So you roughly doubled your money from September of 2024 to November of 2024, a period of 3 months. But let's look at what like an MSTX or an MSTU did over that same time period. So let's see, September 2024, we had $15 for MSTX or MSTU, and then you went up to $220. So you made 1,300% off of MSTX, roughly, and you made about the same off of MSTU over that time period. So MSTY is probably like interesting in a bear market because of the dividend payout, I actually think, especially near the bottom, like, or if you think that you're anywhere near the bottom, like let's say we've entered the bear and it could go lower, but you think that you're pretty close to the bottom. Dialing into this and getting that dividend sounds all right. And continuing to dial into this and getting paid sounds all right. But I think just the downside risk is still great because you have, again, 46 all the way down to $18, even with the 8% dividend. I mean, it's okay. But for the risk to reward, I would prefer, because again, with MSTY, what did you end up getting? You went from $19 to $45. So I'm just going to look at this here. So you had 142% upside, whereas with MSTX, if you believe that this play is still in effect, had 1,300%. And then just MSTR, what did it do? Let me see. I got it over here somewhere. Where is it? Where are you, MSTR? MSTR, right there. And then MSTR over that same time frame, that September time frame. What is that right here? Yeah, okay. Just the stock, just individually itself, did 370 something percent, versus again that like 120. So I don't know. I'm an asymmetric guy. That's really my thing. I'm not a dividend income guy. I tried that stuff with Bitcoin miners, and I realized that it's just not my game, and it's really fucking hard, and that it doesn't give the yields that I want, and I should have just bought Bitcoin. As long as we get green on April 1st, on April Fool's Day, you think that's when it's going to happen? I think so. Historically, we know this. We know that April is a much better month, historically, and that the pain is usually felt now with markets in general, seasonality-wise. Ethan, it's based on the options market, right? So if it drops, the dividend would likely go to... Yeah, exactly. It's going to... the dividend, I think the dividend is set, but again, the price goes down. So if you compare a linear return, it's less, but if you do drip, the return may be higher. Yeah, I get that. It's just not my play. I personally would rather have the asymmetric bet and the opportunity to the upside, especially when I look at, like, I don't have this stuff in front of me right now, but like, let me see, Rainbow. There's just a ton of these. Rainbow, Bitcoin chart. There's a ton of different metrics that show that we're just nowhere near the top of this cycle. This is one of many, right? This is one of many, and I don't know. It looks a little weird with the dark mode. But again, you can see, like, even the last cycle, you can see how we got above red. You can see, like, you can see a reduction. I actually think we would have went higher. So we went past the red over here in the 2013 cycle. And the 2017 cycle, we went right up to the top of it and then stopped. And this one, we got up to like this yellow, like a little bit yellowish orange. But again, if the Fed wouldn't have raised rates to the most aggressive rate in history, I actually think we could have made it up here into the hundreds and got up into like this next tier. So I would argue that at least this cycle, we should be getting up to like green, yellow, even with this diminishing returns each cycle. And we're nowhere near that. That's the 200,000s. So, and even just timing wise, based on where the halving is, we're nowhere near the top. We're just not. This would be the most premature halving in history. So, I mean, just look over here. So like this one, again, 2013, this is when you should have the premature ones. If anything, they should be elongating as time goes on, because you have less upside return, less downside risk, and usually like a longer period where these things play out. It doesn't have to work that way, but over here, again, you had a tight one that was short, and we went from, what, 6 of 2012 to 11/26 of 2013, so a year and a half. This one over here was 3/8 of 2016, kind of near the bear of the bottom, and then we went up to 2017, the end of 2017. So again, about a year and a half. And this one over here, just this last one, we had 6/5 of 2020, and then we stopped in 5/5 of 2021, kind of, because this, what would have been like the mid-cycle, like a depression here, and then pumped up normally. I think that the peak really happened, or would have happened, over here around a similar time to what we would have in a cycle, which was the end of 2021. And it didn't happen because we raised rates at the most aggressive rate in history. Now we're doing the opposite. So now we're seeing maybe a slowdown in economies, but that's going to actually end up creating more stimulus. Europe is talking about doing it. Canada's talking about doing it. China's talking about doing it. A lot of countries that aren't trying to be fiscally responsible and get themselves on the right track are talking about massive amounts of stimulus. And even the United States later in this year, in the middle part of this year, is talking about potentially, again, Doge checks to do stimulus on top of our savings and our austerity measures. So we've got like the opposite conditions this time. And so you can't tell me right now that when this halving started on, what is it, 3-4 of 2024, that we're ending a year later. It just doesn't make any fucking sense. So if anything, I would think this had been extended out because, again, all the positive conditions, the fact that we have ETFs in the United States, the fact that we've embraced it as a strategic reserve at a federal level, the fact that we're looking to do that at state levels, the fact that every country around the world is looking to do the same thing, the fact that Bitcoin is getting custody at banks. All of these things, along with the global liquidity cycle, along with just positives everywhere that I can look at, including the Trump administration and what they're going to be doing in the latter half of this year. You can't tell me that this thing is topped. And again, I think we have plenty of room to grow. So I'm excited about that. I think that's the path we're going down, and that's what I'm focused on. Christopher, thank you for becoming a member. We do have about 28 minutes until we get more data for again, let me just hop over here real quick. For industrial production, manufacturing, and capacity utilization. So we'll see what that data looks like. It was previously gaining strength. We'll see if it takes a step back. Containerized freight also, guys, has been plummeting. So this is showing some slowdowns too. And again, a need for us to be able to simulate more. But I want to jump back here. I want to jump back into the Trump administration, and I want to talk about the good things these guys are doing that are going to help us in the months ahead. So I want to focus on that. So let's go in here and listen to Stephen Miller, who is brilliant. Can't hear that question, but whatever.
Sort of suggested that maybe the administration doesn't.
It's about rogue judges.
As having the same weight. Is it the administration's understanding that you would comply with the verbal order?
Well, again, the whole thing is just preposterous. So, as the Department of Justice has said in writing, nothing that the administration did conflicted with the court order. But there's a bigger issue here, which is the court order is patently unlawful. And if we got into a place in this country where district court judges could, for example, help is the wrong word, could interfere and direct specific targeting or non-targeting in, say, Houthi-controlled territory, could direct which general on the battlefield is going to be in charge of making which decisions, could direct, for example, we can send this military asset to this country, but not this country, could direct what intelligence we could share with Israel versus with Saudi Arabia.
So essentially what he's saying is these judges are overstepping their bounds, and they're meant to be judges. They're not meant to decide what the executive branch should be able to do.
Arabia. If a district court judge can be involved in the conduct of our foreign policy, under no definition do we have a democracy in this country. I mean, not to get too philosophical, but for a long time in this country, power has been concentrated principally in two areas: the unelected bureaucracy and the unelected judiciary. And power has been increasingly concentrated in these two areas. And in the case of the hard left, the judiciary takes steps to protect the bureaucracy, and that further it shrinks the circle in which democracy is occurring. So take an example, just like firing recalcitrant bureaucrats. So bureaucrats serve at the pleasure of the president. The president is elected by the American people. So you have unelected judges protecting the jobs of unelected bureaucrats to pursue their own policy preferences. So when Americans vote for big shifts in policy, they're voting for the president. And so we tend to think about executive power as this, well, it should be, and we ought to think about it as being a unified power. But what it's become increasingly is a severed power, and more of it has been accumulated in the bureaucracy. And then when unelected judges, and
that's what we're fixing,
empower the bureaucracy. So, for example, there's a large section of our bureaucracy that doesn't want to deport any of these aliens, right? And they collude with the ACLU and the judiciary to try to keep them here in this country. So this is really about the restoration of democracy and saying that the person that's elected by the whole American people can implement these big policy shifts. Otherwise, what you have, which has unfortunately afflicted a lot of the Western world, is a situation where voters can't vote for the change that they want. And so this is really fundamentally about democracy. The American people said to get these terrorist gangs the hell out of our country. The president has plenary authority under the Constitution, under the Alien Enemies Act, under the INA, under core Article 2 powers to achieve that. And no district court judge who presides over just some small, like little geography of the whole country could possibly presume to have the authority to direct the expulsion of terrorists from our soil, who, by the way, are also here illegally. Thank you, everyone.
Yeah, this is to me this is a simple concept, guys, and I don't know why it's so hard for people to understand. But having a bunch of judges that are making these kind of decisions is not something that's going to stand up in the Supreme Court, and we have to have an executive branch that can make these decisions. That's why they're there. JT said, "Thank God Jesse taught me to buy leaps rather than short-dated options." It definitely buys you a lot more time to be wrong. Short-dated options are the death of anyone. Leaps can still fuck you, even when you're going out years. So it's definitely like PayPal was a great example of that. That was not a great investment on my part. So you want to be right first and foremost, and then you want to give yourself plenty of time to be wrong for a period of time. All right, real quickly, this guy is talking about Trump, and I wanted to listen to this real quick.
Good morning, TikTok America. Hey, this post is for those people that live in America, who hates America. Get the fuck out. It's just that simple. You don't have to tell us how bad you hate this country. Just leave. If you can't support the country you live in, then go to the country that you support. I'm sick of you crybabies crying about everything. If you don't like Doge, leave. If you don't like Trump, leave. If you don't like conservatives, leave. I'm sick of you people. You're a bunch.
He goes into it a bunch more, but that's where I'm at too. All right. Mario, leaked emails expose Minneapolis lawyers helping illegal immigrants evade ICE. These people should get in massive amounts of trouble, and there should be enough legal course for that to be able to happen. It says a bombshell leak has revealed Minnesota defense attorneys actively strategizing to help illegal immigrants avoid deportation by converting court hearings to Zoom appearances, keeping them out of ICE's reach. The emails sent within a private Minnesotan Association Criminal Defense Lawyers list came the same day as Minnesota AG Keith Ellison reaffirmed the state's sanctuary status, barring local law enforcement from complying with ICE detainers. Again, if these guys are working against the Fed, there's got to be laws out there that are going to allow us to be able to come after these people, and we should. What do we got? Jesse would be smart to convert the 330 Tesla Leaps out to January at a higher price target if we get another dip. I don't know what you have them at. I don't have any of those. I sold out of that stuff a while ago. So I don't know what you're looking at, but I do think I don't know. I didn't love the leaps. I like TSLL because if we get a turnaround here in a decent time frame, again, I showed how that could produce massive returns, and I think the 185 is still the target. And so when we get closer to that number, I'm going to do more buying. Also today, I didn't mention this, but we're supposed to find out, we're supposed to get the JFK files, and it's supposed to be not redacted, less redacted. I really don't know the details, but that's going to be coming out too. And then we've got executive orders being signed at 3:30, so it's going to be interesting to see what all those entail. Let me see here. I think this is it for the Trump one. Democrats are fuming because Trump deported foreign terrorists. Let that sink in. Yes, totally. All right, let's go over here. I want to jump to Bitcoin. I do need to get to Tesla too because I normally miss this. And again, we've got about 20 minutes, 19 minutes until we get the more economic data. I put this out here because it's so true. I've literally got people calling me. I just bought 3 Teslas in a month, and I've got family members checking in to make sure that I'm okay. My neighbors, I think, thought that I was probably suffering immensely too. And I'm like, guy, and now I think they know better because I've got like 3 extra Teslas parked in my driveway. But this is what happens, though. Price goes up, my friends and family think I'm a genius. Price goes down, my friends and family think I'm an idiot. That applies all the time. It just will. It's a forever thing. On top of this, though, better news. We got Trump's SEC chair nominee, Paul Atkins, inches closer towards becoming the SEC's new leader, with a Senate hearing reportedly planned for March 27th, according to Semaphor's Eleanor Mueller. So, again, this will be a positive occurrence because we will have an SEC chair that is actually pro-Bitcoin, which I thought Gary Gensler was going to be because he taught a Bitcoin class, but he obviously did not turn out to be. This 40x short guy that everybody's been talking about with his Bitcoin short position, it's kind of funny. It just shows you how even the big money can get shit wrong all the time over a shorter period of time. This guy was 40x short. He had his entire $525 million Bitcoin short position has been closed. And right when he closes it, Bitcoin's price is starting to fall. So, good times. Let's keep going. We've got Metaplanet acquired an additional 150 BTC for $12.5 million, achieving a BTC yield of 60.8% year to date in 2025. That's a huge yield. Again, these companies are all fighting for contention to get as much Bitcoin as they possibly can, with Microstrategy and Mara right at the lead. But also, look at this. So my favorite companies are leading this list, which I think is a positive thing. Microstrategy, Mara, Riot, I'm not so big on. I just don't know if they're managed as well. But they've been making some progress. And then Tesla, and then CleanSpark. I love this. I love that these guys are some of the biggest Bitcoin holders on the planet, and collectively just how much Bitcoin they're holding. So I think that's a really positive sign for their future. Bitcoin's open interest hit a record 33 billion in January. That's actually, it's bad when you have that much open interest. Then plummeted over 10 billion in 2 months due to political uncertainty, natural market reset. Historically, these deleveraging events offer short to medium term opportunities per crypto quant. And I would agree with this. When you have this kind of massive deleveraging, that's usually when the price action is getting ready to turn up higher. Again, Bitcoin has no top because fiat has no bottom. This is very true. And again, guys, I want to emphasize this right now, because we're talking about foreign governments, not so much this one over the short term, but this one too by the middle of the year, doing a lot of money printing, and they're doing it in different ways. The U.S. will have a bunch of pro-growth policies that allow people to do more spending. That technically isn't money printing, but here's what it isn't. It's not money revenue gained, which allows for growth to occur and more spending to occur and more money to the velocity of money into velocity of money to increase across the economy as it exchanges through more hands, because people aren't just holding it. And that's a bad thing. You don't want that. So we're going to see, but governments around the world are printing money right now. That China's doing this in mass, and they're going to be a lot more doing it in Europe too. Again, $1 trillion, I think they were talking about in spending for NATO countries in Europe, and then Canada looking to print a bunch of money here too, because they're just moronic in nature and they want to create more inflation for themselves. But with all this money printing, it's got to go somewhere, and it's going to end up going to Bitcoin. And I hope people can realize that. That this is going to benefit directly. Also, Luca posted, a lesson BTC has taught us well, and it's very true. Never quit something with great long-term potential just because you can't deal with the stress of the moment. I 100% want to reiterate that. And here's Michael Saylor with his cool shades saying the only asset endorsed by U.S. president in the 21st century. $80,000 is a historic entry point. All the risk has been stripped off the asset. BTC will rip forward with a vengeance. I agree with that, and I don't care how low it goes over the short term. ARK Invest CEO Kathy Wood says El Salvador will 10x the GDP because of the Bitcoin strategy they've implemented. I also agree with that. I think they're being incredibly aggressive for such a small country, well over 6,000 Bitcoin, and that they're going to just continue to benefit. They're adding Bitcoin every day, sometimes more, sometimes groups of 5. And they're going to benefit from that. And then Gel posted, Bitcoin closed the CME gap and built a bullish divergence on the 200-day EMA. Not a bad look at all. I also agree with that. I think that this is something that will end up turning around over the short term. We could still have some short downside price action, but I don't think it's going to be long-lived. Breaking Wall Street giant Cantor Fitzgerald. Again, this guy is the head of the Department of Commerce. Is considering moving into institutional Bitcoin trading per Bloomberg. That's awesome. Mara talking about electricity demand driven by AI and industrial growth is placing unprecedented strains on the grid. Mara's Chris Rappel explains how Bitcoin mining's flexible load reduces this strain and can enable utilities to integrate at 76 gigawatt of demand without major infrastructure costs. I think people are forgetting this, but these miners can be turned off contractually when you need peak power, and so you don't need expensive peaker plants that can cost sometimes 10x the normal rate in order to be able to supply the grid at times of great stress, like when you have ice storms, or at times where like during the summer where you have extreme heat. You don't have to worry about that, and the Bitcoin miners can help with the grid as our grid needs massive build out. You're going to see more money coming into the space too, and I think more tax incentives too that will come into it to help with the energy build out. That's my really strong opinion. Bitcoin adoption by public companies. This is an old one, but it went parabolic in 2024. 25 is going to be lit. I agree with that. I think we're going to see even more. This is massive growth, and this is just another view into the fact that we're going to be doing really well. This is that Bitcoin short again, closed out completely. A bunch of other charts, all of them are positive, guys. I think we're consolidating before going much higher. And MSTR today is down like 3%. Tesla's down almost 4%. Nvidia's down 1%. Palantir's down almost 3%. Hood's down 2%. SoFi's down almost 2%. So the market is doing a little bit of a retrace, and I think that's just because the data today wasn't super great. And we could continue to see more of that, but I don't think it's marking anything that you need to be super worried about over the long run. I just don't. Let's see what Ben has here. Another evolution in the strategy of MSTR, perpetual preferred with a fixed 10% dividend. Yeah, so this actually, I mean, this one probably looks better than MSTY to me. Cool stuff. Oh, Scott Besant, we got something new. Let me see what he has to say. 1 second here. I'm just going to jump over. We can get into geopolitics too. There's a lot going on there. I'm not going to go too deep down the rabbit hole though. Let's see what Scott said. Scott said, I'm pleased to welcome Gary Shapley and Joseph Ziegler to the U.S. Treasury Department, where they will help us drive much-needed cultural reform within the IRS. These veteran civil servants join us to help further the agency's focus on collections, modernization, and customer service. I appreciate Chuck Grassley's effort in Congress to support whistleblower protections in order to help improve transparency and accountability and root out the culture of retaliation. I love that. This is good stuff. Probably bookmark that later. All right, let me hop over here, though. I'm going to jump out. We got a few more minutes. We got about 12 minutes until we get that next set of data. How are we thinking about CLS July calls? I don't know. They could be toast. If they come back and get me any of my money, I'll be happy with July calls, honestly. But again, I do expect, though, that the market's going to start getting better. I honestly think in April. I think in April, because I think people are going to be looking forward to May, where we're talking about all these pro-growth policies being implemented in the United States. And I also think we're going to start hearing good things that are coming from tariffs, how we're seeing reductions with some countries. I think Argentina will be on that list with a bunch of others. And so I think that we'll start to see the market turn around, and I think you'll see some of these start to fly. Will July look good, though? These calls in July, especially the 37 strike, probably not. I'm hoping the 25s pay out. But that's why I think I'm in September or November for some of these others. Let me just check and see what calls. November 2021 at $20 strike, I've got $182,000 in that. So I'm not looking, I mean, the other calls that I'm in are the July 37s are down 91%. I don't know if I make any of that back, I'll be happy. If I make 50%, if I make 100% of it and it closes flat, I'll be fucking stoked. But again, you have to realize this too. A lot of the dilution is done with this one, and we're looking at 790 for the price, a $2.28 billion market cap. To get past to its previous high here in March a year ago is 24.75. So if we get, and this thing can rip. I mean, just look over here. Look at some of these rips. Look at how quickly you can go from November of 2023. We went from $3.49 to January of 2024. So this is a period of 3 months-ish, not even, where we went from $3.49 to $13.50. So there are times where we can absolutely rip. I think we've been going through a massive consolidation that's getting ready to do that. So I do think there's going to be an opportunity to make back a bunch of lost money. And again, that's a 285% move. That essentially is putting us back up to like here, the 26, 27 range, or actually even higher. That's like, that particular move right there would put us at $30 a share. So in a very, very short period of time, a couple of months. So these things I think will look a lot better than they do now. But again, that's the shorter dated ones. I'm okay with completely losing. I've only got like $120,000 in shorter dated clean spark calls right now, just with the massive loss that they've went through. But my longer term ones that over $200,000 or almost $200,000 worth have until November. And so that's only a $20 strike. So those have the ability to pay out in mass. So that's why I edge out. Like I said, when things don't play the way I want them to, I push the date. I can only push the date, I think, so far in these. Yep, you can buy IBIT calls too. That's another way to do it. That's a straight Bitcoin play. But I push the date out and I lower the target. I can only push the date out so far with these, so I'm lowering the target. And $20 I think is insanely realistic. To put it into perspective, the $20 strikes, I mean, what is that? That's right here. That's not even establishing a new high by November. I actually think by November, I think there's a really strong chance that we get up at least to this $37 range. Honestly, I think at least. And so those will be pretty deep in the money, and I've got 2,100 contracts on them. And again, and I think we can go higher than the .618. If you look throughout history on Bitcoin, it can totally do that. It can totally do that. And so I don't know. We'll see what happens. But if we even get a 370% gain, I'd make potentially like $4 or $5 million off of this one investment. And the sooner we do that, the better. But again, I still think it can go higher. I think we can get up into the 40s or 50s. I think that that's possible. I know it doesn't look that way when we're down this much. It just doesn't, right? But if we have a really booming economy in the second half and people are getting really excited and jazzed up and they're getting excited about Bitcoin and they're dialing out of gold because gold has done a really good job acting as a hedge and there isn't much purpose for it anymore because you've made all the money that you can make over here, right? If we just look over here at gold, guys, by gold standards, gold has done insanely well. So if we just look over here, this is the bottom of the bear over here in 2022. And let's just see what has happened with gold. And again, this is gold, okay? This is a huge asset class. This thing's 10x the size of Bitcoin. It's up 85% over that period of time. That is a massive move for gold. There will be a time where we take a break on this. And I should actually kind of see... let me see where we're at here real quick. While we're in here, and we do have about 6 minutes still. I just want to see. I want to dial this down. I want to do something like this, I think. To here. I don't know. Do I want to dial it there? Maybe. Let me try it over a shorter time frame. Right about here is probably a good way to do it. So if you're looking at this here, it's really, we're in the parabola zone, guys. Like, let's just dial it to here. Let's go to here. Either way, gold is in the parabola zone. It's past the 1 fib. It is in the fucking crazy area. It doesn't even matter how you look at it. You could even look at it at this shorter time frame. You can look at it way back to here, towards the bottom that we had in 2015. Doesn't really matter how you look at it. We're in the banana zone. Like we're in the where I was talking about Palantir being really high in the 120 range, right? Like we're in the fucking crazy zone. And so like here's the 1 fib here, and we made it up into the 1618 and then up into the red. And if we go back over here, right here, we can again see that we're kind of doing that same thing. And over the shorter time frame, again, this is going back to 2015. That's probably a little too far. It probably makes more sense to do it over here in like March of 2020 or over here where, again, I think this was, this was March of 2020. Yeah, this probably makes the most sense. That other stuff is just too far out. And so, again, this looks like Palantir right before it peaked. And when this peaks, I think you're going to see Bitcoin going up because, again, people are going to dial back and forth between these to make money. Benedict, why not roll the July calls to November to buy ourselves more time? You could do that. You can do that. I don't care. It's not enough money for me to care. But you could definitely do that. But you have to remember this, right? The July calls, if we do see a major move, like let's say with CleanSpark calls, let's say that we end up going in a very short period of time. Let's say that the things start to recover. And let's say by May, we're looking at this bill going into effect that's going to lower taxes and do all these positive things. And inflation isn't a concern. And this thing jumps up 140%. You're going to do probably better on these July calls than you would the November ones because it's getting much closer to the strike. Maybe not the 37s. The 37s might just be toast. And you're right. You could probably just sell those. I just let the shit die on the vine. This is such a disaster for Tesla. What, the price or the company? The company is actually great. If you're looking at the price over the short term, it can make you sad, right? Because Tesla, there are people buying $1,000 strike calls for the end of the year up here in the 480s when I was selling out of everything. So And again, I bought too aggressively back into here. When it started to fall, I was buying back into here, and I started buying calls, and I wasn't looking at the price. I mismanaged this. Could have done way better. But this company is in great shape. The company is great. The only thing that's changed is the narrative. And then some people that want to firebomb some shit over a short period of time. So I wouldn't focus on that. And again, so we're down here. We're down 53% from the recent high. And I think that we can go all the way down to the 185-ish range. That is roughly, it's probably less than 20% now from this morning. It's about 18 to 19% from where we're at. For the absolute bottom, honestly, I think it could stop right over here too, right at the 200 level. That's down 12.83%. So, I mean, you've experienced the bulk of the pain is what I'm trying to say. And if you look here, look at this return. To get back to the previous high, it's like 114% from where we are right now. But if we drop down even further to the 200 range, that's 142% upside. If we drop down here to the 185 range, that's 165% upside. So instead of what we have right now, which is a potential of 114, you can have 165. And if you own TSLL on top of that, that number becomes a lot bigger, probably like 400%, 500% upside if we get some kind of really good rebound heading into the latter part of this year. So even over a longer period of time, because again, we showed you with TSLL what happened, right? Over these months between April of 2024 all the way over to December of 2024, this thing went up 740% when Tesla stock went up about 240, 250. So this thing has the ability to do, I mean, greatly outsized returns if we get a really strong bounce. And you have to remember that we've had the steepest drop in Tesla's history. Let's just look here. I mean, that's not Tesla. Let's go. That's Cleansburg. Here we go. Let's just look at this here, right? So outside of, it's still worse. Outside of this, September of 2022 to January of 2023, when we dropped all the way down to like $100 almost, $102 roughly, we've beat that both on depth and timing. So we've had the steepest drop in Tesla's history by amount of time and by percentage. Right here, what is this? Well, no, percentage, I guess it's close. It's comparable. It's comparable, actually. It's probably, so we haven't, right now we've had the steepest drop in this amount of time, but the depth is lower over here. But again, if we get to the 185, range, we're down 60%. And so to me, that's just a great buy zone. It's like this opportunity over here. And look what happened next, right? We went from 102 in a disgustingly short amount of time to 217%. So from December of 2022 to February of 2023, a period of 2-3 months, we went up 122%. And then we went up even higher to 299. So we went from 101 to 299, 3x. A 3x. Buffett, price is what you pay, value is what you get. Tesla's price is happy. Yeah, I think this is a great opportunity. Now, if you've been invested, if you went into leaps at 491, it probably fucking sucks. Just to be real. I mean, it sucks, right? But this is a great long-term value. It is. And everybody loved the company. Everybody praised the company and talked about how it was the future up here in the 490s. But it's funny every time, just like here at 100, just like here at 150, every time we get low, and I think, again, 185 would be a great bottom. Every time we get really low, everybody gives up. Oh, we did get our data. Let's see here. Let's jump over. Just a minute ago. Let's refresh. And we'll see if anything's getting better or worse. Manufacturing production is worse than expected. It was forecast at 1.3% for the year over year. It's 0.7. Previous was 1%, so that's worse. And then industrial production is 1.4%. Previous was 2, and the forecast was 2.3, so that is worse. Capacity utilization is actually better, though, which is interesting. So we got a 78.2. Let's just look over here. So we're doing a better job utilizing our capacity. So the previous was 77.7. We expected 77.7 or 78.8, and we got higher than that. So let's just look over here. So again, getting a little bit of a bump in capacity utilization, I think that's probably good. We want to use the stuff we have. So again, this looks weaker. Prices came in a little bit hot for export and import prices. Actually, export prices came in weak. But again, we're high in the previous. So they're kind of flat. Import prices came in just a little hot. They're expected at 1.6 or 1.7. They're 2. Remember, the Fed's mandate, though, is like 2% inflation. So this isn't a crazy number. And then we're seeing slowdowns in industrial and manufacturing production. So I would argue that, again, tariffs are going to help this stuff increase in the future. But I would argue that if anything, this should help the CME Fed watch tool for a May cut. We'll see. It's probably not priced in yet. And then some of that other data might have came in a little hot. So we're probably not going to see it in here yet. And it's only a 20% before this number. But I think honestly, there's a really high chance that we get a Fed cut. And I think the Fed is going to be dovish tomorrow. I agree with Fundstrat on that. They might still talk about uncertainty with tariffs, but I think they're going to be more dovish. And I think they're definitely ending QT, which will be beneficial. How does that work? Isn't it supposed to be a 2x? Yeah, it is, but it's derivatives based, right? So you are doing for 2x daily. So it's trying to give you a 2x the underlying daily, but a 2x the underlying on a daily basis is a much bigger number if you go up straight for a month. Where you lose in these multi-levered funds, and I don't even touch the 3x stuff, frankly, it's just too much. Yeah, daily compounding is what TT said. So I don't touch the 3x. It's too much leverage. And I would never get options based off of a 2x or a 3x levered fund. It's just a great way to lose money. But if you believe you're at the bottom of something and that there's going to be a really strong rebound in the next couple of months, a 2x fund can give you a greater return because it's trying to do 2x daily. And if the stock goes up, 3x in a period of 6 months, even if there's some chop in there, that 2x daily is going to give you better than 2x. So again, these aren't meant to be held daily. They're meant to be held for a daily time frame because, again, they do have, just like options, theta decay. They have tracking issues. They rebalance all the time. And so they're not good if you're just going to go sideways for a long time. They will rape and pillage you. And again, on the downside, when you're falling, they are painful. It is like catching a falling knife. But if you think you found the bottom and you're good with your timing, they give you great asymmetric upside opportunity. Again, high risk, high reward. But yeah, so that, again, the difference there, let's just look at Tesla again. So, let me drag it over. I think it's right here. So over that period of time, you had a 250% upside from April to, the end of December, right? So that's a long time. People tell you that you can't hold this thing over a month. That's over a period of 8 months, 7 to 8 months. And instead of doing 250%, the people at the top got 742. So again, there's some opportunity to make some outsized gains in this thing. Even if you just sold it over here at 33 before this wick, 587% upside. So you can do better than the 2x pretty easily if your timing is really good. Just like with options, though, it's always the thing. Your timing needs to be really good. It always does. All right, let's see. Are there other charts that people want to see? Let's see here. So that's pretty much it for the economic data. So we know capacity utilization is increasing. I think that's good. Industrial production and manufacturing have slowed down. Let's look at the longer term charts maybe, and then we can look at other charts. It slowed down, but yeah, look at this though. I think this is our first breakout, guys. So in November to January was our first real breakout in this number towards the positive. And these were some of the highest. January 2025, 1.9% was the highest number we had seen since October of 2022. So we had our best read since the depths of the last recession, I'm going to call it, because I will say that 2022 was a recession. It definitely was in tech, so I'm going to count it. But since the recession of 2022, which was rebounded off the pandemic, really we saw the best reads that we've seen. Even 1.4% for February is like close to January of 2023. So we're well above the negative numbers that we were seeing throughout 2023 into 2024. These are still some of the best reads. So again, these will oscillate back and forth, but I think industrial production is still on the right path. Let's look here for the 5-year, or let's go to the 10. Let's go even max here. So here's the max number for manufacturing. This is a little muddier. It shows positive, so this is probably too far out. You can see how manufacturing used to be really strong. Going back to the 30s is probably too far. Let's stick with the 10-year. So you can see what happened. You can see how we were in positive territory in 2018, but then again, lower interest rates. The lower interest rate environment didn't help us with actual manufacturing because we were still outsourcing so much to overseas, and the money printer was going burr. And so we saw manufacturing just continue to decline after 2018, and then it fell off a cliff during the pandemic. That's when China benefited the most, and it came back for a very brief bump, just because again stuff overseas, the container freight and all this other stuff was high, and we just had this massive money printing. And so we got a little bit of a pump, and then we just died off. And we were in negative territory again for pretty much all of 2023. Into 2024, pretty much negative the whole time. 1% positive read was the highest level we had seen since December of 2023, and really tied back again with October of 2022 stuff. So these are still good numbers. I would argue they're headed in the right direction. We're still in an upward path. I expect that to continue. Hood. Yeah, we can look at Hood. Let's pull it over. See how Hood's had a lot of good news. I think this stock definitely feels like one of the bouncier ones, doesn't it? I mean, look at this. We went from 35 all the way up to 43, retracing a little bit in pre-market, down almost 2%. But Hood just continues to look strong, in my opinion. And what you want to see is us getting above the one, like the 44 range. And then I think it's just a matter of time before we get up to the previous all-time high in the 60s. So I think Hood is probably a good dip buying opportunity. It's not really one I'm focused on, but I do think that Hood is in a good place. TLT, I've been unimpressed with. Again, yesterday we were up 0.5%. It's not really helping my options, though, because we're just chopping. I don't want to sell too much of this, but we'll see what ends up happening. I probably won't even make any trades today unless I see a really good reason to. I'll probably just leave it alone since I don't have a good one in there. And what did you say, coin? Yeah, we can look at coin. Let me just save this real quick. Market opens in about 6 minutes. We'll check the market open. I'll probably go through some more charts. I don't have a lot more to talk about. Really, I want to see what happens. I want to see what happens with Putin and Trump today. I think that could be the one bit of shining news, and if it's not, I think it'll just mean more downside price action. So again, Hood has not been, or Coinbase hasn't been saved from any of the downside price action either. If we look here, all of this, crypto, Tesla, everything has been crushed. So this thing was down 50%, right? So like if you're feeling pain, it's pretty normal. Everybody's feeling it. And I think it's going to be short-lived, and I think it's going to change, but it's been painful. Let's just look over here at what we are just to get back to the previous high. 88% upside to get back to the previous high in December. So again, 3 months ago. And where will it go? I don't know. I mean, technically, if we just look, let's do this. Let's get rid of the trend-based extension for now and just do a fib retracement. That'll be a cleaner read for us. So we'll go from the bottom of the bear over here to the top. I mean, honestly, it looks like it's fighting to go higher. It dumped underneath the 5. I mean, it could be getting rejected off this and roll down further down to here. I doubt it, though. We'll see. It could. But it looks like it's trying to fight and get back above the 0.5 fib, which, again, kind of looks like what Bitcoin's trying to do with the 200 moving average on the daily time frame. And Microstrategy looks like it wants to break out. A lot of these look like they want to break out. They look like they want to go higher. Got any other Hood leaps like the ones you called before? Not really. Not really. It's not the same. I don't think it's the same asymmetric opportunity it was, which is why I'm not in it. I just want to say this. So, like, this did go up. Again, I made like 1,800% off of this one. It did go up 744% since December of 2023. So, I mean, again, what is that, 15 months? Roughly 14 and a half, 15 months, and it went up 744%. So, like, I don't know, Palantir, Hood, I think the asymmetric opportunities over the short term have come and went, and so I'm not interested in buying leaps in something that I don't think can go up a lot over a short period of time. So no. Mike Lauk, I guess the 2x makes that much worse. What are we talking about, Mike? This is with all investments, right? Ago. One thing to realize is 2x derivatives is that if you go down 50%, you don't get back. No, yeah, of course. Yeah. It's a 2x levered fund. So if you go down 50%, you've lost a shit ton of money, and it's going to take you an astronomical amount to make that back. Yeah, well, I mean, with anything, even with Tesla, I mean, if Tesla drops 50%, it's going to take you 100 just to get back, right? And then you're multiplying that when you have a 2x derivative fund. On a bright note, if we look at it this way, with CleanSpark being down, what did it go down? It was down 70% from its high. Unless you think this company is failing or that Bitcoin cycle is over, which I think it's dumb to think that the Bitcoin cycle is over. I think it's pretty borderline retarded. Unless we're heading into a depression that I can't see, then 70% downside kind of limits some of that downside risk. But if you rode like 2x funds or again options, some of which I was a part of, and I lost a lot so far, from up here at 24 down to 789, it's a painful drop. It's a real painful drop. And again, these 2x funds represent that stuff as well. And if I just jump over here again with Tesla, I would argue that with it being down in pre-market, 53%, almost 54% from its recent high, helps eliminate some of that downside risk that you have to worry about. What is MSTX recovers back to 40 and then MSTR back to 350? Let's look at MSTR first, because MSTX is just going to be, based off of what it does. 1 second here. I'm waiting for my screen to refresh. Let me go over here. Gold. Palantir. Oh, no. It's probably over here. Let me see. 2-year. So much crap. So MSTR. MSTR can actually get, it can get back to the 500s, I think, pretty easily. Right? That would be a 90% move in it. And I think that can happen with a 50% move or less in Bitcoin. So that's even before we get to 150,000. Or if we get to 150,000, let me put it this way. I think that we get to at least 541 in MSTR. And I think that can give you a 300% return pretty easily in MSTX and MSTU. So I think at least a 300% return is pretty likely. At the very least, if we see Bitcoin just getting up into what are we in the 80s right now? So if it just gets up to the 120 range, and I think that you could see a 400 or 500% increase in MSTX and MSTU if you get higher. Yeah, we've opened up red. If you look here on the heat map, here's what the pre-market looked like. So it was stupid red, and let's switch this real quickly to the opening candle and see what we look like. Tesla still down, Amazon down, Nvidia down. Google down, Microsoft down, Meta down. Interesting. This is still interesting, though. To me, it'll be weird to see how this ends in the day, guys. Maybe this hasn't refreshed. Maybe this is representative of yesterday. I'm going to slow down here real quick, slow my roll. Yeah, okay, it's not. It looks like it's updating now. So what's interesting, though, is, again, the big guys are the ones getting hit the most. Meta down, Microsoft down, Nvidia down, Tesla down, Amazon down. But we're seeing some green shoots in smaller caps. Definitely not seeing it in the technology services sector. So tech is still getting crushed today. Let's hop over here real quick and see what the watch list. The watch list is probably just getting brutalized. Let me hop over here. So VIX is up. We'll check the levels on that in a sec. Grab is up. Hang Seng is up. Also, Mark Newton from Bunstrat said that he would not look towards Chinese equities right now, and he would look towards the S&P instead, and I 100% agree with that. Because the Hang Seng and all these Chinese indexes are incredibly overbought. He actually said he looked at India and Mexico if you're looking to get into the or if you're looking to get into, sorry, I was reading a comment too. If you're looking to get into emerging markets, Magnificent 7 down only. Well, not just the Magnificent 7. There's a lot of stuff down right now. It looks like it's just tech is really getting hit hard, both in technology services and electronic technology. And again, Amazon and consumer durables are down, and you're seeing some green shoots across other areas like energy, minerals, health tech, and then just kind of flat across the board in the rest of the market. But again, we had 2 days of good breadth. We'll see if today ends up being the same. All right, let me look here. So TSLL down 7.343% because Tesla's down 3.5%. MSTU and MSTX are both down roughly at 9%. Move index is coming down, so the bond volatility is actually dropping, even though the VIX is up. Microstrategy down 4.2%. Mara down 3.47%. NVIDIA down 1%. We're seeing Fannie Mae or Freddie Mac going up, Fannie Mae going up. A lot of these others are just kind of meandering. Palantir is only down 1.85%. Some of the other Bitcoin miners are just down like a single percent or a couple percent. CleanSpark did good yesterday, and so it seems to be getting hit a little more today. Or at least was positive when others weren't yesterday. Let's see here. The dollar is up just a hair, but still just dropping kind of like a rock, which again is going to be good for, that will help with the currency. Currency for international trade, that will actually be a headwind or a tailwind for companies like Tesla. So it will help them that the dollar is actually losing buying power. Fubo has been slow grinding back up. Can you show where the next volume shelf is? Yeah, I can look at Fubo. I don't love the company, but let's look at it here. And I'm just looking at the S&P. So the S&P's down 0.41%. Nasdaq's down 0.74%. Small caps are only down 0.7% on the Russell. I think it's actually interesting that they're showing strength. Yeah, you are seeing a little bit of a chop up here. This is such an ugly chart. I can't even go back that far because it's just so broken. But there's actually a huge gap in here. That's on the weekly, though. Let's see what the daily. The problem with this thing, I think you're going to be really limited by upside here because of this massive gap, of which we've closed some, right? We got to the .618. I don't know if the fundamentals are just really going to outperform. Maybe they will, and that will keep us safe. But there is a big-ass gap over here. A huge gap that could still fill. And you could almost say that this is bear flagging too, and that it could roll over more. It does look like it's trying to get higher, but we'll see. I don't know. It's one of those things where, again, if it gets back to its recent high here, it's at 640. This thing has just been such a clusterfuck of volume. It's not even usable. You can't even go back and look at the previous chart because it was like in the 2000s because of just what's happened with this company over time. I don't know. Maybe it could still go up, but I don't know. I'm just not interested in it. Do you think Tesla will go below 180 after earnings? No. And if it does, it'll be a blip in the pan, and I'll probably just leverage in even more. Merger with Disney still on? That could be helpful. That could definitely help it go up. The problem is, though, you just can't look at previous history in this thing. Look at this. It just becomes a clusterfuck. It'll turn into really large blocks. It's just like, look at that. That's what you get. So you can't even look at the previous history before, like, I don't know, maybe the 2020, like late 2022 range or something. I mean, honestly, or maybe here, because otherwise you just can't even see it on the volume profile. But the next one here is going to be like the next peak is around $4. If it can get above that, then it can still, this is just a tough one to look at. You really should focus on fundamentals. Looks like Bitcoin's at 82,000 and trying to break lower. I could see it testing down. Here, I'm just going to move this up because I'm probably almost done anyway. I could see this moving down and testing back to here again another time. Because again, we hit it. So you can see a bunch of times here where we hit it, found support, found support, found support, found support, hit it, broke down, found support very quickly, found support again, broke down, hit this 4+ year trend where we had trended up from the last cycle top, and then bounced up finally and got back above it a day later. Then we hit the 200 and tested up against it, but couldn't move. I could see us breaking down to here and trying to test this dip under 80,000 range. And again, we're at 81.7 right now, so it looks like that's likely. And before ending up trying to go higher, I could totally see that. Global M2 is up though. Yeah, it's up, but you need velocity and money. Susan, holy shit, how are you doing? I've been busy selling doors door to door, or been busy selling doors to doors to door, door to door to door. Okay. Well, hey, I hope you're making a bunch of money from it. I haven't seen you in ages and missed you. But yeah, I think I think that M2 doesn't really matter if you don't see velocity in money. That's what Kathy Wood keeps talking about. And we need to see velocity in money, and we're not seeing it right now because, again, people are scared about tariffs. They're probably going to continue to be scared over this next 2 weeks, or they might front run it and realize that tariffs aren't going to be as big of a concern. If we see some announcement from Trump and Putin today talking about the end of the war, I think you could see the market pop. If we hear about a peace deal between that. And I think that, again, you're going to hear more positive news over the next couple of weeks of countries that proactively lower their tariffs in order to be able to avoid reciprocal tariffs. I think you're going to see some of that too. What a hell of an idea, going door to door, selling doors. You guys are great. I told Schwab I was going to move to Robinhood, and they offered me a 1% cash bonus and margin of 5.9%. Pretty sweet. I hate margin, but I do like the fact that they'd give you 1% bonus. Yeah, I don't know. Robinhood giving you a 2% transfer offer is pretty enticing. If you move $1 million, that's $20,000. But again, I don't know that they pool their insurance in order to be able to protect that full amount. I'm still fuzzy on that. So I don't know how good that is. But yeah, so we could see this maybe testing down a little bit more. I do think, though, guys, I think that a month from now, we're going to be broken out into the upside. Kidding about doors. I've been collecting cans for a refund. Oh, you're great, Susan. Yeah, Tesla was much happier in the 400s than it was recently here when it dropped much, much lower. That is for sure. It's down now. What is it down? Down a little bit lower. It is down 54% from where it was just even a few months ago. So yeah, that's been no fun at all. I'm trying to see here. I don't know if I have much more to talk about though, guys. Let me see here. Red to green on Apple and crowd so far. We need the other Mag 7 to help fill this bear gap. Or honestly, if we saw the Russell outperform, I think that would be good too. And again, maybe we see more down. We could see more down. I would just like to see TLT benefit from that downside. So far, it's not really. It does appear like it's coming back a little bit, though. If the market continues to drop, I think this thing will pop. And I'm sitting just a little under $500,000 on it now. But it looks like it's down 0.34% on the day. What I would really love to see is this breakout. I'd love to see this breakout. You can see where we had a great one just in November of 2023. We went from 83.20 all the way up to 101. I would love to see some kind of breakout in this thing where I could just make a shit ton of money in a short period of time. Thank you, Susan, for the 10 gifted memberships. I appreciate you. You don't have to do that, but I really appreciate you. So I think that you could see something like that again, where again, what was that move? Let me just see what that move was. And I'm going to slow down on my selling. I'll let some of this stuff just bleed because again, that was a 22% move. 22% move in the upside, and what I'm looking for is a 22% move here in the next month or so. So I'm probably going to slow down on my selling of the TLT and just hold on to what I have and just barely, only sell it on good days because I think that move can totally happen, and it's happened a bunch. If you just look over here, guys, here's another one right here, October of 2022, and in a short period of time, we went up 19%. And then there's another one over here where in a period from April of 2024 till October of 2024, that's a little bit longer of a time frame, but we did roughly a similar move, and we've got this consolidation period. So I think in the next month or two, we could see a breakup higher, and that's kind of what I'm hoping for. Thank you, Susan. You're a sweetheart. Bitcoin makes 1.5x move after every correction spring towards 2024. MSTR goes. MSTR can go even more. I was trying to be conservative with some of my numbers. I'd rather be conservative now and then have people operate based off that thesis and then be able to see large upside later. But you're right. It could get really fucking crazy. We could get to $1,000 in MSTR, I think. And again, MSTU and MSTX off of 1,000%, $1,000 move would be probably pretty high. Anyway, I think I'm going to cut it here, guys. Let me see. Unlock said, I'm going to all in on Tesla. Hits 185. Tesla already trading. Yeah, dude, I agree. I'm going to go pretty heavy in. I don't know about all in, but I want to have at least a couple $100,000 in TSLL. If we hit that 185 price range, I'm totally doing that too. All right, guys, I wore red. I don't know if that was meant to be. It was meant to be ironic and a joke, but I guess it actually kind of maybe led to some downside. I apologize. I'll buy a green cut-off shirt so that I can fix this for next time. But anyway, I love you guys. Take it easy. Kind of a shitty day. The data wasn't really great for the economic part, but I do think the trend is still up. And in industrial production, I did like the capacity utilization continuing to grow, but industrial and manufacturing, I think, will continue to grow. I think the March read and the April reads will be a lot better. Again, I do think inflation is still coming down. I would trust trueflation. I wouldn't trust this other bullshit. I wouldn't trust the Michigan survey. I would focus on what is real. We're making this country more efficient. We're making it to where we've got sustainable debt. We're making it to where we're going to provide a lot of incentives for the poorest in our community, which has been a major problem that we've been talking about for a long time. We're going to give my parents on Social Security more money. We're going to give people who work their ass off and work overtime all the time more money. And we're going to give waiters and waitresses that bust their ass to make sure that people get their food and their drinks all the time more money. And again, they were working under the table anyways. Now they don't have to hide it. So I think all these things, along with lower corporate tax rates and all the stuff that we're doing, is going to be really beneficial. And I don't think it's going to take that long for it to happen. We'll see if I'm right. I'm pretty sure I am. And I think a lot of people are going to be eating crow later on that are talking shit right now about Trump and this administration. And a lot of European and Canadian people, too, are going to wish that they lived here. So anyway, I love you guys. Don't short Tesla, don't short Bitcoin, and don't short America. I will talk to you guys later. Peace out. Okay.